Good morning everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 30th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that price continues to trade within a very narrow range. Right here, if you kind of count out these last few days, within the range, you've got all of these days going kind of sideways here. This one really hasn't started today, pre-market overnight trading. But before that, completed days, we have 1, 2, 3, 4, 5, 6, 7, 8 days, 9 if you count that one, 10 for today. Basically, that's a very, very narrow 2-week range, and it all comes to a head likely today and tomorrow as the Fed comes into play. So at 1 o'clock p.m. Central, 2 Eastern, we'll see the FOMC meeting minutes along with the Fed interest rate decision. This will give us another key level to look at, very similar to the key levels we've seen before. And as I've mentioned, FOMC key level is very important. This is the September level being offered right away. Over here is the November level being offered, the retest being offered. Very important pivots. We're going to get another one here at some point today, and the initial move will be very, very important, as will be the retest. So again, today, tomorrow, we could begin to see an increase of volatility that leads to a breakout from this range, and that could spark some very nice movement over the next 1 to 3 weeks. Again, given the uptrending behavior here, overall uptrending structure remains intact. That suggests more upside. Even if we were to break down initially, any breakdown could still be an opportunity for bulls to reject and swing it back up until proven otherwise. 2500 is a very big level. 2525 in that zone. Really, that 2529 is the most important key level there. Failure to hold that level would be indicative of a larger decline to come. All right, let's take a look at the NQ. You'll see here the NQ looks very similar. Sideways action, very narrow range. Coming into FOMC day to day, it has a range that has been between 6,600 and 6,830. Very quiet range there. And again, right now just trading 41% of ADR today at 51.25 points of overnight range when it's been averaging 124.5 points. So very quiet overall. Again, this one has an upward trending structure that will likely remain intact even if we were to break down a bit here. Say 6,400 could still be an opportunity for bulls to defend and look to return back toward recent highs. So again, the uptrending nature of this market remains intact. A failure to hold, though, say this thing were to rally and reject hard at 68s, breaking through 66 could be a big time indication of weakness to come, especially in the near term. So a couple of things to look for here as we head into the afternoon. If we take a look at crude oil, we do have crude oil inventories here today. Crude oil has been tracking along with the ES and the NQ at a very high correlation rate compared to recent price action. And so this right here has been very, very nice in terms of the uptrend, in terms of being able to break through recent highs and hold new higher support. All that looks really good. Down here we have a very narrow range over the last 12 days. You can see how tight that's been. It's actually been longer than 12 days now. But generally speaking, a 12-day range is somewhere 10 to 12 handles. And right now we're seeing not much in terms of range at all. Over that 12-day period, we're seeing 4 points. So very narrow, 59% right now of average range. So again, this suggests that we could be looking at a very significant expansion or increased volatility state heading into February's trading, likely to the upside, and very similar to the indexes here. If this were to drop as low as 49s, this could still be an opportunity for bulls to pick it back up for a rally ahead. So a couple of things to consider here with crude oil. Lastly, gold. You'll see that gold has been very, very bullish. The day that this one finally stopped going down, we knew that there was a likely bounce back toward value coming on that day right there. After this huge drop, we were looking for the day. That was finally the day. We knew it might take some time to build some energy, because it built some energy over here before releasing. and that's exactly what it did for a while here. Eventually started going higher, and now it's gotten this great uptrending price action going on. It continues to honor the pullbacks to the pivot range, hit it perfectly this time around, and launched higher. So the whole uptrend remains intact, and for next month you see a higher value relationship, which means that if we pull back as deep as the midpoint here of this current month's range, that could still be a buying opportunity for a continuation higher. And now that we've broken clean above 1260 and have run another leg here, this rounded bottom is cleanly intact, and again, any pullback even as deep as 1260 could still likely be defended for a 100 handle move. So right now gold remains very bullish. We are at a short-term overextended state right now where we've just rallied and just put in kind of a high in overnight trading. So short term we're seeing absorption off the 1319 level, 1319, and that is seeing weakness after rejecting the highs at 1320.8. So I would say right now in the very near term, if price stays below 1319s, that could be a short-term pullback here, and from that high to this low, again, we could be looking at a midpoint retest up ahead, and that again will be the 1298.10 level. That could be tested either early or late in the week here, or early in February. So again, we have the potential to see a snapback toward this zone right now given the impulse rally. Alright, that is it for now. We will see how this plays out heading into the rest of the session. Remember, FOMC today, NFP report on Friday. A lot of news here. We have more earnings coming out as well, and that could affect the market as well. Alright everyone, have a fantastic rest of your day, and I'll see you in the trading room. Take care.